Welcome back to another exciting episode of our daily stock analysis. Today, we're diving deep into the financial world of Honeywell International. Get ready, because we've got all the juicy details on this iconic company. So grab your notepads, because by the end of this video, you'll be a financial whiz when it comes to Honeywell. Let's start with one of the most important metrics when evaluating a stock, the price-to-earnings ratio, or PR. As of the trailing 12 months, Honeywell's PR is 23.49, just slightly above its 5-year average of 23.35. This tells us that the stock is trading at a reasonable valuation compared to its recent history. Looking ahead, the forward PR, which is based on future earnings estimates, stands at 18.84, suggesting that analysts anticipate strong growth for Honeywell in the coming years. Now, let's talk about the PG ratio. This is a handy tool to assess a company's growth potential relative to its current valuation. Honeywell's PG ratio is 2.78, which implies that investors are paying a bit more for growth compared to some other stocks. However, keep in mind that this number can fluctuate as future growth expectations change. Moving on to profitability, Honeywell shines here. Their return on equity is an impressive 31.8%, indicating that they're efficiently using shareholder equity to generate profits. Meanwhile, their return on assets stands at a healthy 8.9%, showing their ability to generate profits from their assets. But what about earnings? Well, Honeywell has an earnings per share of $8.08, and analysts are optimistic about the company's future, predicting a 5-year EPS growth rate of 8.5%. If you're an income-oriented investor, you'll be pleased to know that Honeywell offers a dividend yield of 2.17%. Even more impressive, their dividend has been growing at a compounded annual growth rate of 9.02% over the last 10 years. Looking at margins, Honeywell boasts a healthy operating margin of 19% and a profit margin of 15.1%. These figures suggest strong management and cost control within the company. But it's not all sunshine and rainbows. When we take a look at Honeywell's revenue and earnings evolution over the last 8 years, it's clear that they've faced some challenges, with both metrics experiencing a negative trend since 2018. This situation has been partially reflected in the stock's performance, as it has struggled to see significant growth over the past 5 years. Now, let's talk about debt. Honeywell's debt-to-equity ratio is 1.24, which suggests they have some financial leverage. However, their long-term debt-to-equity ratio is 1.02, indicating that they might have a more manageable long-term debt profile. For those of you interested in recent performance, the stock has delivered an average price return of 9.54% over the last 52 weeks. And when it comes to the big picture, Honeywell currently boasts a market capitalization of a whopping $126.01 billion. Now, here's where it gets interesting. Analysts are bullish on Honeywell, predicting an average price target of $219.50 over the next 12 months. Which represents a potential upside of 15.66% from the current price of $189.78. But, and this is a big but, our analysis suggests a fair value of $186, which is slightly below the current price. This could imply that the stock is currently overvalued, so it's essential to keep this in mind when making your investment decisions. And there you have it, folks. That's the scoop on Honeywell International. Remember, this video is for informational purposes only, and you should always do your own research and consult with a financial advisor before making any investment decisions. If you found this video helpful, don't forget to hit that like button, subscribe for more finance content, and ring that notification bell so you never miss an update. Thanks for joining us, and until next time, keep those investments smart.